This month we've updated our forecast for the world economy and we're reducing our forecast for global growth. Only very slightly, but it's largely to reflect the weakness of activity that we've seen so far in 2016 in the developed market economies, particularly the US and to some extent Europe. The emerging market forecast actually hasn't changed at all, and in fact we've seen some good signs of revival beginning to come through in some of the near-term indicators for the emerging market. So the forecast there doesn't change, but overall global growth is reduced. We still expect the Fed to raise rates at the end of this year, and that's really reflecting the profile of activity that we see in the United States. So having been quite weak so far this year, we think that growth will actually pick up somewhat in the third quarter and as we run into the end of this year. Inflation is also likely to pick up a little bit as well, and we think that will be sufficient for the Fed to raise rates by 25 basis points at the end of 2016. Elsewhere though, we think interest rates are likely to come down, and that means that the Bank of Japan and the European Central Bank are going to cut interest rates further into negative territory. So they'll take interest rates down a bit further. We also think the Bank of England will cut rates again down to just 0.1% in November.